Aloha and welcome to Java. Thank you kindly for joining me. It's August 27th, 2024. It is Tuesday. There was quite a bit that happened yesterday. So, as always, let's start with what's going on in the markets. But I've got a few things I'd like to bring up with you. So, and especially anybody that realizes what this painting is a parody of, actually, NFT. So, starting with the markets, we've got a favored risk indicator, of course. The MMRI now risk rising slightly at above 240 now, but we've still got the fear greed meter is above neutral. We're in greed territory. So with these two, basically what's going on is slight increase in risk. We've got low volume going on in the markets. I'll talk about that in a bit. Basically meaning that the big money is still staying for the most part sidelined, watching what is going on here. So what happened with stocks in the markets yesterday? We've had a drop off, basically slight pullback and correction. It's not anything huge. However, we've got the Dow is slightly in the green as I'm doing this. We've got stocks that kind of mixed at the moment and volatility rising. So we've got gold pulling back a little bit, oil pulling back a little bit from those tensions in the Middle East, now looking toward supply and lower demand. So the big thing to watch is the lower demand. And with this, that's basically a nod to the real economy that's going on. Things are dropping. I'll talk about that in a little bit as well. So the underliers for the risk rising, we've got the 10-year yield as well as the relative strength of the dollar gained a bit slightly. So as these increase, stock prices go down. So it's pressuring the stock slightly as these two gain a little strength. They're basically bouncing from the bottom. The market has overpriced rate cuts from the Fed. And we've got the futures also looking at this as well, slightly down. So with this, we're watching volume again. If you're trading today as a day trader, watch these. We've got some weak indicators. And the sentiment right now is basically watching to see if they will buy this next incoming dip. So, as you know, the market is overpriced. The mainstream media is actually in agreement with this finally. And this could be a bit of a movement point, not quite what I would call a pivot, but it's definitely something that is going to set some levels in the markets going forward if this plays out. So, looking at the markets today, again, a light day. We're looking at the Case-Shiller home price index and consumer confidence. Now, in reality, consumer confidence dropping. We've got a dichotomy going on. We've got those that are doing okay. They're still doing well. They've still got a bit of money. They've got them in investments that are still paying. They've still got their jobs. In the real economy, we've got home prices are now starting to drop. We've got new loans are basically pulling back again. There was a slight surge when the prices in mortgage, basically the interest rates came down. We saw a flurry of people refinancing. And as I said before, they weren't just refinancing to get a better rate. What they were doing is refinancing, getting the maximum amount of value they could from their homes. This is a danger signal. Why is this? They're much more likely to walk away from these loans in a couple of years when they cannot make the payments. We've also got insurance costs increasing, and looking forward to what is going on in the political sphere. Either way, doesn't matter. Property taxes will also be rising. Okay, so back to the markets for a moment. We do have some earnings coming out today and tomorrow. Some of the larger ones, and I would like to bring out. We've got sterling climbing to the highest level since March 2022. This is a sign of the currency wars that are coming in. So basically, it's not that the sterling is really gaining value, but it's that its largest balance, if you will, the US dollar, had dropped a bit. So when the US dollar dropped a bit, stocks went up. So did the balance currency, which is the sterling. as well as the euro. Both of those gained on the dollar's drop, and that's what we're going to continue to see. I also had on the other screen, we were talking about Bitcoin a little bit. It's pulled back. There is a bit of correction due. I think it did hit the 65,000 level, which is a resistance level. It's pulling back towards 62, possibly 60 as we're doing this. And then we'll watch the levels from there if it continues with strength. Outside of the markets themselves, into the real economy, as I was saying before, it is weak. And we've got several indicators that are real indicators, not Fed reports, that are coming out that are telling us the truth. We've got this coming out from Zero Hedge, talking about the RV downturn, in his words, turning apocalyptic, with largest dealerships offering 55% discounts. My opinion, this is early on with this. We are watching what I'm calling the reverse C19. I almost said the word, but the reverse C19 from the pandemic trade coming into play. We watched all of these things skyrocket as they came in. We watched RVs skyrocket as everybody was kind of closed in looking for a different way to travel, and they purchased all of these. So now oversupply, demand has dropped, and they've got way too many. We're watching this also in the vehicle market, beginning to watch repossessions increase at a serious rate. That is not going to stop anytime soon. We've got the job numbers dropping in real terms, more companies laying off because they need to cut their costs. And the easiest way for them to cut these costs in reality is dropping their workforce. They drop their workforce and they drop their goods orders. They don't keep as much in stock or in inventory. So we're going to watch some kind of supply crunch short term from smaller companies. We've also got this is penalty points being added, hundreds of euro, because this is started from Europe, but it's the same in the United States. These penalty points adding hundreds of points to motor insurance premiums. So auto insurance getting more expensive. People cannot afford the overall cost of their vehicles, because as the insurance premiums go up, the gas cost and also the maintenance. So people are dropping maintenance on their vehicles as well. And as I was just speaking about, the housing market was another boom with this C19 thing. Now, there's another one they haven't spoken about yet that I'm interested in because I think it's a one-off, and that is the supercar market. We're watching supercars had a major boom, as well as high-end wristwatches. So those sound strange, but those are beginning to reverse. It will show also with the unwinding of the yield curve. These are all real factors we can watch that give us better idea of the true timing of what's going on, along with the unemployment rate. But they're skewing the numbers on that so badly that it's really difficult to watch what's actually going on. I think that the true numbers at this point in time are right in between probably 11 and 13% for the United States of unemployment. So I've got a few other stories I'd like to cover with you. The first one is we're talking about tokenization. This is the end goal of all of this. They're going to increase basically the pressure on the middle class to go down to the lower rung and soak out whatever money and assets the middle class has. The end game for this is this tokenization. And along with this, I've got the, everybody knows the CEO of Telegram was arrested. Basically, I am putting this out to see if this had anything to do with this. He was just predicting that the year 2024 would be the year of blockchain mass adoption. So pushing towards independent currencies, cryptocurrencies, Web3, and other apps that could potentially be trading systems outside of what they've got planned. So we can't have that going on. So they've still got him at this moment detained for this. We've also got these companies wanted to bring out a firm called Centrifuge. So they are a real world asset tokenization company. They've launched lending market with Morpho Labs, and they're working along with Coinbase, layer 2 blockchain base. So Coinbase, I have my opinion on them. They are working basically with the system that I don't necessarily care for. And on the other side, we've got Meta partnering with a company called Sage, trying to expand geothermal energy so they can make use of this for Meta in particular. So this should advance them as an individual, but all of them, all of the major ones moving towards data centers, data center technology, data center growth, and a large determiner of this will be power, meaning energy, not just political power. So with this, although that is a large part of it also, I'd like to go into the real wars, what's happening now. More bombing going over in the Middle East as they're waging these proxy wars that is going on. But I would like to mention how they're fighting these on the other side, the silent wars, so to speak, going on. Sanctions, monetary wars, currency wars, and trade. So these are fought between mainly two methods. First is through currency and valuation devaluation, and secondly, through trade exports, imports, and the imbalance there. So we've got Russia is hitting from one side. They are beginning to use cryptocurrency for international transactions starting September 1st. They've been testing this crypto payments platform to break away from sanctions and also break away from dependence on the US dollar. We've also got China's using their yuan in this as well as India. So China is on the other side of this. Their Commerce Ministry on Tuesday, basically in response to the European government, Canadian government, and the United States imposing up to 100% import tariffs on Chinese electric vehicles, trying to cut out their trade. So with this, China's industrial profits are rising 3.6%. Now they're still in trouble, but they are actually producing. And with this, we've got China's exporting curbs on semiconductor materials. So hitting back at the chip factors, they know that all of the larger companies need these chip materials. So they're basically hitting back with the supply of what they need, what the United States, Western world needs for all of these chips that they're planning on putting everywhere, including in us. So we've also got Iran, another player here trying to sanction them. The Western world is. They're hitting their 5-month high non-oil trade with their neighbors, exceeding $26 billion. So they are moving outside of the dependency range as well. And I just want to put these out so that you can realize on a global factor what is happening, because if they hit back with these currencies, the currency and valuations will bleed deeply, directly, and immediately into the debt market, which will crush the stock market. So with this, I just want to mention to pay it forward, because that's how we all live. If you've got a little bit extra and you can put something forward to donate to your favorite charity or something that you can do, I would appreciate if you would do that. It's all how we live our lives. So with this, I wish you all a wonderful day in general. And until I see you again, my friends, stay free.